We've got a big week in the semiconductor industry with two companies reporting earnings this week, two big companies reporting earnings. Talk about which one those are, give you a preview of what to expect when those companies report their earnings later this week. We had a product announcement from AMD. We'll talk about that. We have some signs of life from Super Microcomputer. We have to talk about that. We have the company that we talked about on last week's show potentially delaying their IPO, but we'll start this week's show with Nvidia. Started the week at 127, up nearly 6% to finish the week at 134. We'll have to look at this technically because we've been talking about for several weeks now with Nvidia. You would like to see technically it push to a new higher high. You'll see if the company did that when we get to the technical segment. There's always timestamps down below if you want to jump forward or jump backwards or jump anywhere you want. Now, Nvidia's backed CoreWeave, another company that is planning an IPO likely sometime next year. CoreWeave is a cloud computing company, and by all accounts, Nvidia is not only backing them from kind of an equity stake, an investment stake, but by most accounts is that Nvidia is giving CoreWeave priority shipments of these high-performance GPUs that every other company in the world wants. In fact, it's pushed some companies like Amazon and others to look for their own custom silicon solutions only because CoreWeave was getting outside shipments that were bigger than some of the giants in the cloud computing business. Now, what CoreWeave has done is over the past year, they've raised lots and lots of money to continue to buy NVIDIA GPUs. Not only that, but they've taken the NVIDIA GPUs that they have and they've gone to Morgan Stanley and other investment banks and actually used the GPUs as collateral to raise even more money. So it has some detractors of NVIDIA saying this is kind of a Ponzi scheme, maybe at worst, but also could be some type of fraud as they are backing this company from an equity stake. They're backing them and giving them priority shipments of the GPUs. And then CoreWeave then borrows money against the GPUs that NVIDIA sold them to buy more NVIDIA GPUs from NVIDIA. So there's kind of a circular relationship here. But nonetheless, CoreWeave has a legitimate business model, and we'll certainly take a look at their financials when and if they go public. But banks are throwing this company money, including a new $650 million credit line, which the company will probably use to call up Jensen Huang and NVIDIA and buy more GPUs. Now, Blackwell is obviously the forthcoming AI supercomputer chip that we're awaiting from NVIDIA. And according to Morgan Stanley and all the sources that I have, is that the Blackwell ramp appears to be quite strong. In fact, we've got commentary this week from Jensen Huang basically confirming that the Blackwell ramp and demand for these chips is not only insane, but the manufacturing process continues to be strong. We'll talk about Taiwan Semiconductor, the manufacturer of these Blackwell chips, here in a moment. But this is key for NVIDIA, as we've talked about numerous times here on the show. The fact that the revenue estimates going forward for NVIDIA are widely different depending on what analyst is covering the company. If NVIDIA is able to come towards the high end of the estimates, the forward price to earnings, which currently sits about 47 on NVIDIA, will shrivel and shrink, probably down into the 20s and likely head the stock even higher. If NVIDIA comes to the midpoint or even the low point of analyst estimates, well, certainly the stock is at very best fully valued. Now, we talked about this many times here on the show, but also on our newsletter. If you're not subscribed to the newsletter, it is a free newsletter, at least for the time being. And I talked about why NVIDIA stock could continue to climb. And we talked about different types of analysts. We talked about other companies like Apple and the gap between their high and their low estimates, and the clues that we have that NVIDIA is likely to see very, very strong demand for their Blackwell product. Again, links down below to the newsletter. Now, Super Microcomputer. It's been a bad couple of months for Super Microcomputer. In fact, over the past 6 months, shares are down 49%, but shares bounced back a little bit by about 13% this week. We've got a split adjusted. They went through a 10-for-1 stock split. So if you haven't looked at this company in a while, it was about $478 per share. Now, after the split, you're looking at $47.80. I guess my adjusted price target on this one is probably probably about $15. But the company jumped this week as they reported that they have 100,000 GPUs deployed. And not only is that significant, but the fact that they're using their liquid cooling systems to cool these GPUs and in some cases reduce the energy demand for these 100,000 GPUs by up to 40%. So saving the client lots and lots of money. So if you can save money on the energy side, you got to imagine these big cloud computer and hyperscaler data centers will probably just order more and more GPUs. Now, according to some of my researches, these 100,000 GPUs was more in line with what Supermicro kind of guided to in the past. And so this isn't really anything overly surprising other than maybe it shows that the existing clients aren't necessarily scared away, at least in terms of the orders that they've already placed from Supermicro's financial and potentially Department of Justice investigation. We still don't have a 10K annual report from Supermicro Computer. And if you have the balls to step in and buy a company that is under investigation by the United States government and has not filed a 10K annual report, well, your balls are a lot bigger than mine. This still is a stock that I wouldn't touch with a 10-foot pole, only because you've got other companies, including Nvidia and maybe even just the broad-based ETFs, that'll give you a lot more safety if things continue to go wrong over at Supermicro. Another semiconductor company that I would have no problem investing in is Advanced Micro Devices. They have no problem filing their financials on time. Not only that, they have one of the world's greatest CEOs who I saw this week celebrated her 10-year anniversary at AMD. And if you stretch this out to 10 years, well, she's had the stock climb by about 6,000%. So needless to say, I hope she had a great 10-year anniversary. Over the past months, AMD, like Nvidia and other stocks in the sector, up big time over the past 5 days, though. The stock slipped a little bit after unveiling its new AI chip, which more or less was known. We knew that AMD was going to release this MI325X, which is just maybe a incremental upgrade over the MI300, which has been in the marketplace for the last maybe 8 to 9 months, if my memory is correct. Now, the company always publishes some kind of comparisons, and in this case, you always got to look at what they're comparing it to. They are comparing this to an H200, and according to AMD, which again, you have to take these with a grain of salt because they're not going to put comparisons on their own website that make their new product look bad, but it beats the H200 in most cases, including in high performance and also memory. But we have to remember that Nvidia is now ramping up their forthcoming product, which is Blackwell, which by all accounts would absolutely blow away the MI300 and 325X, although this will still have use cases as we will likely see that Blackwell still remains in relatively limited supply versus the demand for the forthcoming future. Now, the company responsible for manufacturing these chips, not only from AMD, but also from Nvidia, is Taiwan Semiconductor Manufacturing Company, probably one of the most important companies in the world, and it's got a big valuation, $841 billion valuation. But I do want to point out the forward price to earnings on this one is, I say just 28, and that's after the shares year to date are up 83%. Over the past year, shares are up 100%, and even over the past month, they're up 16%. So despite the rapid rise in share price or price, the price to earnings ratio is still not wildly overly egregious, sitting in about 28. Now, what you're hoping for is continued growth over at Taiwan Semiconductor, and we'll get a view of that when the company reports their earnings later this week. However, the company every single month gives you an update on their business from a sales perspective. And back on October 9th, the company said their year-over-year growth in the month of September saw sales increase by 39%. This followed a previous month read, which I believe was relatively similar. In fact, you had a month-over-month increase of about 0.4%. So by all accounts, things are absolutely on fire over at Taiwan Semiconductor. Obviously, they make a lot of cell phone chips as well, so that's maybe particularly bullish for Apple as well, although Apple has to sell the devices as well. But if we read through to Taiwan Semiconductor's earnings, we definitely see that there's strong demand not only from the cell phone manufacturers, but from Nvidia as well. When the company reports their earnings, we'll be looking for a couple of things. On the high level, we'll be looking for right around $23.3 billion worth of revenue. The low end estimate is really close to that, and so is the high end estimate. This is another reason why when we look at Nvidia's wide range of revenue estimates, we're just looking a quarter out. You have like 100% difference between the low and the high end estimate. That's not what you're seeing over at Taiwan Semiconductor. But what I do see here, again, a company priced at about 28 times forward earnings. You've got an $800 billion valuation. You've got a massive moat around the business, and you've got revenue growth in kind of the mid-20s, maybe even 30% growth rate, really out for the next year on this one. So you've got some great growth, and if Taiwan Semiconductor can pass down some price increases, which they get asked about on every single conference call when the company announces their press releases, because all of the analysts are looking at Nvidia's gross margins and saying, boy, you probably could charge them more. Even when you look at Apple's gross margins, their sales growth isn't as strong, nearly as strong as Nvidia's. Most aren't, but Apple's got massive profit margins as well. Taiwan Semiconductor always sidesteps the question and really looks at their partners like Nvidia and Apple as partners, and in a lot of ways they're doing them a favor, because Nvidia and Apple and others really don't have another alternative other than Taiwan Semiconductor. So we'll see what the company does in terms of that. They've talked about price increases. In fact, I think they've passed some on. From the EPS side, you're looking at about $1.79 on the EPS, maybe as high as $1.83, and you're looking for EPS growth kind of in the mid-30s, maybe as low as the mid-20s going forward. If they can convince Wall Street that EPS growth is going to be any higher than this, well, certainly shares of TSM will continue to move higher. We'll look at TSM from a technical perspective here in a moment. Now, the other company that is going to be reporting their earnings is basically goes hand in glove, at least on these high-end chips, with Taiwan Semiconductor. In order for Taiwan Semiconductor to manufacture all of these high-end chips, well, they need ASML's lithography machines. And ASML over the past 5 days saw its shares rise about 2.4%. Over the past month, they're up 10%. And year to date, you're up, I would say, just 11%, probably lagging the performance of most of these other semiconductor stocks. Part of that has to do when we look at the financials of ASML. They'll report their earnings later this week as well to go along with Taiwan Semiconductor. Is their market cap is at over $330 billion, and they've got a little bit more rich of a price to earnings ratio, coming in at about 41 times. Now, from a revenue perspective, it's nothing compared to basically the rest of these companies, at least on the high end. You got about $7.83 billion worth of revenue. This is the expectations for this week's earnings report. On the high end, maybe over $8 billion. I'll tell you what, if they come towards the high end, that'll be very, very bullish. What we have to have confidence on, as I'm seeing here with ASML, is they've got to give Wall Street confidence that the next 3 to 4 quarters are going to be absolutely fantastic. The company has pushed back some of their sales and delayed some of their sales growth into this back half and the first half of the calendar year next year, and it's got to be able to convince investors that these sales are going to come through, because you're expecting 23% growth for the upcoming quarter, and then 55 and nearly 40% growth for the 2 quarters after that. So Wall Street's definitely going to be looking for revenue totals much closer to $10 billion for the next couple of quarters. And if ASML is able to convince Wall Street of that, well, obviously, that should be good for shares of ASML. From a revenue perspective, a earnings per share perspective, we're expecting $5.33 for the upcoming quarter. Some analysts projecting maybe as high as $6 as you move out several quarters. You should see solid earnings growth. Wall Street's also going to pick the company apart from a guidance perspective. If they're not able to deliver the EPS growth and the revenue growth going forward for ASML, well, there'll certainly be some areas technically where this one will pull back to. Point those out to you here in a moment. Now, Cerebras, which was the company we talked about almost exclusively on last week's show, they had that IPO scheduled. But one of the things that we talked about that was a red flag inside of the company's S1 filing for their IPO is the fact that they have this not only investment from the United Arab Emirates-backed G42 AI company, but also the fact that they derive almost all of their revenue. In fact, over 83% of their 2023 revenue comes from this United Arab-based company, and there's absolutely nothing wrong with the United Arab Emirates. In fact, I have several friends that live there, would love to visit it one day. For the most part, the country has very good relationships with the United States, although those things can get cloudy and can get complicated, as politics in the Middle East can be that way. Also, it is believed that the Committee of Foreign Investment in the United States, otherwise known as CFIUS, I did not know this committee existed. I tell you what, if President Trump is reelected and Elon Musk is given the job of eliminating different types of jobs on Washington, that could be one of the committees getting the axe, I guess. But this committee looks into these foreign investments into these United-based companies, and they are reviewing those G42 investments in Cerebras. I think that could be at play, but also just investors looking at a company that derives 83% of its revenue from one company, let alone that it's a foreign-based company, and let alone that it comes from a country that could potentially draw sanctions or other types of export restrictions from the United States, depending on the temperature in Washington and the Middle East. Well, that's going to keep a lot of investors on the sidelines. I was kind of hoping Cerebras could potentially go public, maybe come under some pressure, and then we could get it at a good price. We'll see if that materializes going forward. Now, from a technical perspective, we got the SOXX ETF. This one's looking absolutely beautiful. Back in September, we found footing at the bottom of the channel. Now, this is not the longer term channel. You want to stretch this out. You actually get this purple line is really kind of the longer term, we'll call it decade long trend. But more recently, we've been in this very steep uptrend on this one. Looks like we're making a beeline at least to the middle of the channel, which should take you back up into the 247 range. Obviously, with most of these companies, particularly Taiwan Semiconductor and ASML reporting this week, that could give you some upward or downward momentum in this one. The SMH, which is highly more concentrated in Nvidia, found some demand for shares at the middle of the channel, which is why we divide these channels in half. And it looks like we want to maybe make a new higher high on this one, which should take you back up into the probably 280s, maybe as high as 290s, maybe even 300. So you got more upside there. Now, Nvidia has been the one that we've been watching. Let's take off these lines so you guys can see this a little bit better. I'll even take kind of the middle channel out. And again, this middle channel is reflective of the breakneck trend that we've been on since 2022. I don't want to ignore the fact that we're actually been in kind of more like a decade-long uptrend on this one as well. We revisit that one at a later date, but good news for Nvidia's investors. At the very least, we've retested the highs that we made back here in June. Now, we haven't made a new higher high, which should be back up in the 140s, but this is close enough. You took out these highs in this cluster of consolidating highs back in August. You've taken that out and you've made a new higher high. It looks absolutely fantastic. This is why I bought shares of Nvidia maybe several weeks ago. So just keep that in mind when I'm talking about Nvidia. When I publish articles and it tends to have a bullish stance, I do have shares of Nvidia. Just want to make that clear from a disclosure perspective. Investors that do not want to see Nvidia fall on its face and lose the money should have a stop right at about $100, maybe just under that, maybe at $98, $99 per share. You get underneath that, then this trend is more or less over. But right now, this trend looks like it's intact. Looks like to me, if you get bullish news, particularly out of Taiwan Semiconductor this week, and more Blackwell momentum, this one's going to make a new higher high. In fact, you can make a much higher high on this one, maybe back into the 150s, 160s. Complicating the situation a little bit is every one of these companies outside of, I believe, a Broadcom will report their earnings before Nvidia. They don't report their earnings till the middle of November. We'll hear from AMD, Intel, and obviously most of these other companies well before that. AMD is setting up before earnings. They've got earnings on the last week of October. So we're still about 2 weeks away from earnings. It is at an area where we haven't confirmed a new higher high, but it's more or less continuing to confirm the uptrend that you're in. AMD is probably a wait and see until the company reports earnings. Broadcom was in a very similar situation as Nvidia in the fact that it was not able to close above its all-time high that it made back, actually all the way back in June of this year. For all intensive purposes, it basically confirmed that, or at least ran up against it and then found some resistance, which is a logical area for Broadcom. Broadcom also very late to report. In fact, they don't report their earnings until December. And so you got this one going to ride the coattails of the rest of the industry. If it does, who knows the high that this one can make. When you move to all-time highs, there is obviously an absence of data up there, and technically the thing can kind of have a mind of its own. Intel has found some clear footing down here at the $20 range. In fact, we've more or less bounced off that, and we're now at about $23.56 on this one. Overhead resistance should be at about the $24, $25 level with Intel. The company will report their earnings likely around the same time as AMD. That'll be the last week of October, coming in at about the 24th. All eyes will be on that report. You've got Qualcomm. From a technical perspective, it looks beautiful. We've just confirmed a new higher high. We've pulled back a little bit. Ideally, you'd like to see this one walk back into the kind of the 130 range before you start a position, but I wouldn't believe or blame anyone considering the strength of this company and also the troubles that Intel is having for maybe potentially stepping in this one a little early. Taiwan Semiconductor is setting up at the top. Talk about how they have earnings coming up on Thursday of this week, Thursday, October 17th. At any time, you got these things setting up at the top. And by setting up at the top, I mean the chart is setting up at the top of a range as you move into earnings. And so those earnings have bigger weight. The company really has to beat expectations, not only from the current quarter, but more importantly, the guidance. If you're able to do that, you could get a massive rally on this one from 190 up into the 220s, maybe more conservatively into the 200s. Pullbacks, though, in TSM, if they disappoint in any way, should be bought. The first area that we would be looking at is probably closer to about 160. ASML also reporting their earnings, like we talked about, a day before Taiwan Semiconductor on Wednesday, October 16th. I'll likely have earnings videos. I'll probably publish ASMLs on this channel. We'll probably publish TSM on the main channel. This one's at the middle of the range, but given that you have earnings coming up, I would just simply wait, because if you do get strong momentum on earnings, you're not going to get the best price, but you're likely on your way to confirm to a new higher high. So maybe after earnings, this goes from 840 up to, we'll give it a bullish read, maybe up to 940. That doesn't mean that it's over. It's just confirming that you're probably going to retest these highs back up here at 1100. If you break down from this area, that is when you open up your wallet and free up some cash and add an allocation to ASML. NXP has just been kind of hovering in the same area for several weeks now. You could buy that stock if you feel like it. ARM Holdings looking absolutely gorgeous. This one doesn't report earnings until the first week of November, but it will likely trade in sympathy and in parallel to some of these other semiconductor stocks. But more recently, we've been making a beautiful channel. And if that channel holds, you'll likely come back and retest these highs up here at 188. SMCI is going to be looking a little bit different only because we had a stock split. Doesn't really change a whole lot, although the lines and graphs have to be readjusted. I would say with SMCI, that is the longer term trend right there. This green line, which I'll change to purple, just so we're all clear what I'm talking about. This purple line is the trend. We are way overextended on this one. We are still in more or less a downtrend, although we kind of broke out of it. So we'll see what happens with Supermicro. They report earnings the last week of October. So we'll get AMD, we'll get Intel, we'll get many companies, ARM Holdings somewhere in there towards the last week of October. We'll see if it's able to hold this area. Consolidating in this area would be a strong move for SMCI. But again, they have the overhang of an investigation and eventually a 10K, which will be poured over intensely by analysts. DELL's still looking really good. I mean, this is a beautiful chart. We're near the top, but I tell you what, if the momentum stays in this one, you could retest areas much higher. You'll have earnings from DELL on Tuesday, November 26th. Now, Micron looking absolutely beautiful. Hit the middle of the channel, has rebounded. I'm expecting this one to continue to probably walk back up and make highs maybe back into the 140s, 150s. So don't feel like you've missed the boat on that one. That one's still got a long ways to go. I have a position in Micron just for full disclosure. LRCX, which is Lam Research, looking quite good. We'll switch this over to kind of a weekly view to give you a little bit better view of this one. Slightly over a trend line where I'd be excited about buying this one, but this one has consistently, I mean, we're talking about for the last decade, made higher highs. And that one can be bought pretty much at any time that it's not on one of those highs. And then finally, we are looking at Applied Materials, AMAT. This one hit the middle of the channel, and this gives you a great reason why we dissect these channels in half, because you tend to find support there. That's what this one did. It has bounced higher. If you make a new higher high on this one, you've still got another $50 in upside. Applied Materials, I believe, has reported earnings more recently, so we won't hear from them until November. Folks, that was the Semiconductor Show for October 13th. We'll join you again later this week when we have earnings from Taiwan Semiconductor, and we also hear from ASML Holdings. Hopefully you guys have a wonderful day. Don't forget to subscribe to the newsletter. Links to that is down below. And don't forget the main channel as well. Thanks for tuning in. Hit the like button if you can as well. And we'll see you again next weekend. Bye for now.